Welcome to the jungle. Why should you care about financial markets? Hey there, future Wall Street wizards. Ever wonder how companies raise money? Or where your retirement savings actually go? Buckle up, because we're diving headfirst into the exciting world of financial markets. Think of financial markets as giant online marketplaces, but instead of clothes or gadgets, we're talking stocks, bonds, currencies, the stuff that makes the global economy tick. Whether you're saving for a house, investing in your future, or just curious about the world of finance, understanding these markets is key. Why should you care? Because these markets don't just impact big corporations and fancy investors, they affect your everyday life. From the price of your morning coffee to the interest rates on your loans, financial markets play a role. So let's demystify this world and empower you to make informed financial decisions. Markets Unveiled: what they are and how they work. In a nutshell, financial markets are platforms where buyers and sellers come together to trade financial assets. These assets can be anything from stocks and bonds to currencies and commodities. Just like a bustling marketplace, the name of the game is supply and demand. Let's say you buy a share of Apple stock. You're essentially buying a tiny piece of ownership in the company. As Apple grows and becomes more profitable, the demand for its stock increases, driving up the price. That's how you make money in the stock market. But it's not just about stocks. Financial markets encompass a wide range of assets, each with its own quirks and characteristics. We've got bond markets where governments and companies borrow money from investors, and foreign exchange markets where currencies are traded 24/7. It's a dynamic, interconnected web of transactions that keeps the global economy humming. Diving into stocks. It's all about ownership. Let's start with the rock stars of the financial world: stocks. When you buy a stock, you're buying a small piece of a company, making you a shareholder. It's like owning a tiny slice of your favorite pizza place. As the business thrives, so does your investment. These stocks are traded on stock exchanges, like the New York Stock Exchange or the Nasdaq. Think of them as giant auction houses where buyers and sellers place bids and offers on company shares. It's all about matching those buy and sell orders at lightning speed. But why do companies issue stock in the first place? It's a way for them to raise capital to fund their operations, expand into new markets, or develop innovative products. By going public and offering shares to the public, companies can fuel their growth and achieve their ambitions. And as an investor, you get to be a part of their success story. Section 4. Bonds. Lending money, reaping rewards. Now let's talk about bonds, the more conservative cousins of stocks. When you buy a bond, you're essentially lending money to a government or corporation. It's like giving your friend a loan, but instead of a pat on the back, you get regular interest payments and the promise of getting your principal back when the bond matures. Bonds are considered less risky than stocks because they offer a fixed income stream. You know exactly how much interest you'll receive and when you'll get your principal back. That's why they're often favored by investors seeking stability and predictable returns. Governments issue bonds to fund public projects, like building roads and schools, while companies issue bonds to finance their operations or expansion plans. The bond market plays a crucial role in channeling capital to where it's needed most, supporting economic growth and development. Section 5. Forex Frenzy. Making sense of currency exchange. Ever traveled abroad and exchanged your currency for another? Congratulations, you've already dipped your toes into the vast ocean of the foreign exchange market, also known as Forex. This market is where currencies are traded against each other, 24 hours a day, 5 days a week. It's the largest and most liquid financial market in the world, with trillions of dollars changing hands every single day. But why do currencies fluctuate in value? It all boils down to supply and demand, influenced by factors like economic growth, interest rates, and political stability. When a country's economy is strong, its currency tends to appreciate in value and vice versa. Understanding Forex is crucial for businesses engaged in international trade, as it allows them to manage currency risk and protect their profits. But it's also relevant for individuals, especially when traveling abroad or sending money overseas.